ASE Technology just dropped a bombshell on its Q3 earnings call that most investors completely missed, and it's not about market demand, it's about something way more tangible. The company raised its 2024 LEAP advanced packaging revenue forecast above the original $3.5 billion target, and now sees actual full-year revenue potentially several billion dollars higher. Subscribe to Taiwan Tech Pulse. We bring you what Taiwan's own analysts are saying, before Wall Street catches on. Got a Taiwan tech story you want us to cover? Drop it in the comments. Here's the thing, when you hear advanced packaging, you should immediately think Nvidia and AMD, because their hottest AI chips depend on it. ASE's COO Wu Tien-yu revealed that LEAP revenue could double by 2027 from the 2024 level, thanks to new plant equipment and production ramp. And this isn't just a packaging story, it's also a test story, with packaging demand stronger than initially expected, especially in full process, new process steps, and new products. Full process alone is on track for about $300 million in revenue this year, and it's expected to see significant growth in 2025 as it becomes gross margin accretive with scale. But here's what's really eye-popping. ASE's conventional ATM business, that's assembly and test, is also recovering, especially in industrial, power, connectivity, and memory segments. The company raised its full-year ATM revenue growth forecast from +13% to +30% year-over-year. And when you combine LEAP and conventional, total ATM revenue growth for 2024 is now forecast at +35% year-over-year. That's a massive upgrade, and it tells you the entire semiconductor supply chain is heating up, not just the bleeding-edge AI stuff. For Q3 2024, ASE guided total revenue up 21% to 22% quarter-over-quarter, with gross margin between 20.5% and 21.5% and operating margin between 11.5% and 12.5%. Breaking that down, the ATM segment alone is expected to grow 11% to 13% quarter-over-quarter with gross margin of 28% to 29%. And the EMS segment? That's electronics manufacturing services. It's projected to jump 40% quarter-over-quarter, though with lower operating margins of 3.2% to 3.4%. Now, the gross margin story is especially interesting for investors. ASE's ATM gross margin is expected to rise quarter by quarter, and it could break through its 30% structural ceiling in Q4. If that happens, the company says it will reassess and raise its long-term structural gross margin range. Think about what that means for a company that does tens of billions in revenue. Even a few percentage points of margin expansion is worth billions in profit. And the key uncertainty here isn't something like trade wars or demand slowdown. According to Wu, the biggest risk is something more operational: timely completion of plants, equipment, yield, and production ramp. In other words, the demand is there. The question is whether ASE can build fast enough to meet it. For anyone watching Nvidia's supply chain, that's a critical distinction. So what's the takeaway? ASE is seeing strength across the board, from advanced AI packaging to conventional chips for cars, factories, and memory. That's a signal that the semiconductor recovery is broadening out beyond just the hyperscalers. And for investors in US-listed names like Nvidia, AMD, or even Apple, ASE's results are a leading indicator that the back end of the chip supply chain is running hot. We'll be watching the Q4 margin breakout closely, because if that 30% ceiling cracks, it changes the earnings story for one of Taiwan's biggest tech companies.